Okay, I think we are live. Welcome, ladies and gents. It is 6 p.m. here in well, actually, I'm not even in the UK anymore. I'm on the Isle of Man, which is a separate country from the UK. So this is the monthly insights video. So if you've never come on a video like this before, this one is very slow paced. It's not like the normal videos I do. It's a Q&A so I've got, actually this is the most questions I've ever got. I've got 4 pages worth of questions here. So it might be a long one, but probably what I'll do is answer the questions a little bit more succinct and concise than normal. So, you know, it's really funny. People always say, is there actually anything in Neil's tea? Hold on, let me see if I can do it without spilling it. Yeah, there you go. People always say that in the comments. Is there anything in that cup that he has on his table? Yes, there's hot tea in there. Keeps my throat going when we're doing these longer videos. So yeah, welcome everyone. I always love to know where you're all from. We've got Nuno from Lisbon. We've got Lady Penelope online. Great. Upstate New York, Sparky. We've got Taiwan. Hey Taiwan from Leeds. So yeah, we've got lots of people on the stream here. Good to see you all. Usually I start with a couple of announcements, things about the channel. So the plans for the channel over the last 3 weeks have gone exactly as we discussed, really smoothly, with making more shorter videos. So I'm glad that the feedback from these shorter videos is very positive. Seems to be going very well so far. So that's excellent. I'm going to continue on that. Some people were commenting actually and asking, and actually I had a couple of emails saying on Friday, you know, everything okay, Neil? You didn't see me yourself in your walk around. You didn't even show us and talk. It's interesting that people noticed that, because I wasn't even going to mention this, but then I thought, you know, in the space of integrity and communication, which is very important to me, this week has actually been mentally a very, very difficult week. Very, very tough, because you'll probably notice I stay very unbiased on topics, talking about Russia, Ukraine, things like that. Very unbiased. I just like to give economic and financial data and numbers. But unfortunately, we now live in this world where, and you've probably heard this a lot, I believe it's a very extremist viewpoint that's been propagated in the last couple of years, where people say, if you're not for us, it means you're against us. So because some of the videos I've been talking about Russia and the economy, people are saying, if you're not talking about Ukraine, it means that you agree with an evil dictator and all this sort of stuff. So this last week, I've never had so many negative comments. Go hang yourself, go jump off a bridge, go, you know, if I ever see you, I'm going to spit in your face, and, you know, all this sort of stuff. People say, you know, get a thick skin, grow up, and things like that. Imagine getting that 20 times a day, and you're just reading your comments and you're seeing that 20 times a day, and people say, oh, you just need a tougher skin. Believe me, I've got a tough skin, but there's certain things when you've seen it, and that's why I didn't even make a video on Saturday. I thought, you know what, I can't be dealing with all this stuff. And then you probably notice a few of the videos were taken down. People, I don't know, these groups, they do these attacks, they they report your video all at the same time. So then you get your channel pinged, or videos get taken down. So all this sort of stuff. So just in case you're wondering, like, I was a bit off on Friday's video, that's why. I just wasn't in the right frame of mind. But anyway, it is what it is, you know, off my chest now. So let's get on with this. So, you know, really, you just got to realize on this channel, I do this to serve you. I'm not doing it for my own ego or anything like that. If I wanted to do that, I would just set up a brokerage, or I'd set up a hedge fund, and I'd make a ton of money from doing that. See, I'm not really interested in doing that. I like doing the mentoring, I like doing the coaching, stuff like that. But it's not really about making billions of dollars for me. I enjoy this community when people aren't sort of going crazy at me. So anyway, let's get on to the first question. So this is from Brandon. Here we go. So Brandon Mullin, who is a coaching client as well. He says, what will the run on banks lead to in the immediate and medium future? I'm thinking economically and in regards to people's psychology around trust in the future. And yeah, that's a really interesting point actually, because what we've been seeing is these bank runs recently. So it started in Canada, we've seen it in the Ukraine, and of course we've seen it in Russia with them trying to take out US dollars, so a lot of US dollars from the ATMs. So that's one thing that we've been seeing. So what will it do? Well, it will accelerate the move to CBDCs, because if you think about the banks, guys, thanks for the comments. I'm seeing all the appreciation there, so I do appreciate that. Thank you. So yeah, if you think about what's actually happening, the central banks and the commercial banks, what are they seeing? They're seeing what's happening right now. And you're seeing people doing bank runs. So they think, well, we've got all these insurance programs. People won't do bank runs anymore and things like that. They don't want cash. You know, cash is dirty. The last 2 years, cash is dirty. It spreads viruses and things. Well, what we've actually seen is that people do want cash. And people are more willing to go out and get cash and hold the cash than they are, you know, to have digital currencies, because they know in this crisis what's happened. We've seen just banks just close stuff off, you know, no more digital payments. So it is very worrying, and that's why I always say make sure you have cash. I just got cash again today from the ATM. Make sure you have silver and gold. In fact, I've got some over there, but I haven't got it on my table today. But make sure you have that. Because remember the bank, remember what I told you about during the lockdowns, how I would go in and take cash, because I had we had some different cafes and stuff and businesses at the start of the lockdown. As soon as I saw the lockdown start, I said to my wife, we need to sell. Because what I did was I did the numbers, I did the math, and realized that if we'd have kept, if this went on for 2 years or even a year of lockdowns, we would have lost so much on rent and all the other overheads which are fixed, that it would have taken 2 to 3 years to make that back in profits. So it didn't make sense. So we sold at a good price, and that's what we did. Now, what were we doing? Well, the staff from the different locations were taking cash. And one day I went, collected some cash, coins and notes, took it to the bank, and they said, oh, we can't accept that. And I said, but that lady in front of me just asked for cash, and you said there's no coins or notes available. Because of, you know, COVID and all this, you can't give it out because it spreads the virus. And she said, oh yeah, well, we can't take it in either. And I said, okay, that's strange, but fine. Later on, they changed their policy where you could give in cash. So that's what we were doing. You know, I had all this cash sat at home. Everyone's then giving in cash. But guess what? You still have those people that go to the desk and ask for cash, and they're told there's no cash available. It's a bit strange. So here's my theory on it. I think they're taking in this cash and destroying it. That is my theory. Why? Because they want to go to this cashless society, a CBDC. So they don't want a lot of cash out there in the system. Next part then, so the psychology. I think people's trust has been massively lowered, in the last couple of years. But the bottom line is it won't really make any difference long term, because if you, one second, let me just, that's how you ask questions, by the way, for the people asking. Long term, it won't really make any difference, because central bank digital currencies are where it's going to. And people say, well, I'm going to fight it. I'm going to have gold. I'm going to have this. Look, you can try that, and I'm doing the same thing, cash, metals, but how long does that last for? Cryptocurrencies, I've got crypto. How long does that last for? You see, once they've got this plan underway, and they've got everyone on this CBDC, and actually it's a lot more scary than you could even imagine. I've been talking about this video I've got coming out soon. I'm still working on it. I've got to be very, very careful, because I know I'll get sued straight away as soon as I start exposing people and organizations. So I'm just going to be very careful with how I do it. I'm still getting legal advice on how to release the video correctly. But it's a lot more worrying than you can even imagine. They are going to get everyone onto these CBDCs, and then it's going to be enforced via financial institutions. You don't meet these criteria, you don't get any credit lines. You can't get CBDC, you can't do anything. I know it sounds conspiratorial, but that is where every last piece of research I've done says we're heading towards. And at that point, it doesn't matter any of this stuff that we're talking about. We're trapped. We're trapped into this system with no way out. And that's even before the AI and robotics and, you know, all these dystopian movies that we've watched over the years. That's without that stuff. Imagine when all of that gets going. It's going to be very worrying. Let's move on to Megan's question then. Okay, so this question is in relation to my monthly macro video. I've talked about this the last couple of videos. Honestly, from me to you, if you have never watched one of my macro videos, just watch this one. Just do it. Just trust me on this. Go over to the Patreon, the link's below. Watch this video. And if you don't want, and you can watch back all the other videos as well. And just cancel by the end of the month, say 31st of March, if you don't want to continue on getting all the posts, investments, what I'm invested in, the videos, etc. Don't go any further. But I would just say to you, just try it out, and I'm sure you'll like it. So Megan's question is in relation to what I talked about on in terms of commodities. So if historically commodities have tanked during a recession, would we be likely to see the same trend, this time with the supply chain issues? Now that's an interesting one, because you've actually got three things at play here, and I'm only going to really focus on two. So the answer is yes, in some regards. So that's the first thing. Now, if we think about the 1970s and what happened to commodities then, you had beef, which doubled in price. You had corn, which tripled. Wheat, which quadrupled. Now, wheat, we're going to see higher prices. You're going to see an issue. People don't even realize what's coming with wheat because it's grown in Ukraine. A lot of it, I think it's either 30 to 60%. I get it mixed up because I was talking about sunflower oil, and I think sunflower oil is either 30 or 60%. So just one of those numbers for both of those, and then it's processed through Russia, and then it comes out. You're going to see issues here. So my answer to this question is some commodities are going to spike, like gold. So the 1970s period, by the way, was an inflationary recession. It wasn't a deflationary recession, or you know, each recession is different. I won't get into them all because we could talk about this for 10 hours. Each recession is very, very different. So the 1970s was more of a stagflationary recession. So high inflation, which I believe is very similar to what we're seeing now, but also high unemployment. See, we haven't got the unemployment yet because we haven't seen the unemployment scarring, which is a spiral that I've modeled a lot of times for you. We haven't seen that yet, but we will. It will come eventually, moving us into a period of stagflation. On the homepage of the YouTube channel, I did a video on it 2 years ago. Go and watch that. It explains where we are in this cycle. 2020, 2021, inflation. 2022, high inflation. 2023, who knows? It's going to be a mix of high inflation and possibly a stagflationary period. And then maybe later on, deflation, which is likely, but we don't know when. So what did well in that period? Some commodities did. So gold and silver, I think gold and silver 10x'd. You saw a 10 times return during that period. So some commodities will do well and others will do badly. I won't go too much further down the line here because honestly, you've got to watch that video where I talked about the different, there's 4 investment classes that I would consider right now, and that's it, just 4. And everything else I wouldn't really bother with. Okay, so that is Megan's question answered. Todd then. Hi Neil, are brokerage accounts safe from bail-ins, credit unions? If not, spreading accounts across multiple countries and currencies may be the only way to mitigate risk. Do any safe havens remain, or have all countries resorted to depositor theft bail-in schemes? Okay. Well, there really aren't many safe havens right now. That is what I'd say to all of you. There aren't many left. And it's very rare to ever hear me say something like this. But because of the time frame that we're in on this current cycle, which is the 4th period of this 4-part cycle, And we're sort of halfway through the fourth period of the cycle, of the fourth cycle. So it's very, I know it's probably a little bit complicated, but because we're at this point, there isn't much left in terms of protecting huge amounts of wealth. But you can protect smaller amounts of wealth with precious metals. So this is holding, gold, something like that, silver at home or in a place that's very secure, a local vault. But again, when you're in this kind of cycle period, there isn't really much that you can do to really make sure that you're well secure, because the expression, if you haven't got, not your keys, not your assets and things like that, if you don't hold it, you don't own it. This is the sort of thing that I am concerned about for certain countries. Now, I have metal in vaults in other countries, and I'm not as concerned about those metals and vaults as I am about my own country, or say in London or America. Even Zurich, I'm not quite as convinced as I used to be after what we've seen them moving from their stance of neutrality in the last week. Even that I'm sort of questioning. So, yeah, so another note I made is that any fiat currency that you hold is going to be at risk. And it doesn't matter how you hold it, it's going to be at risk, whether that's in a bank account, savings account, pension, brokerage, whatever. It's going to be at risk, especially if we see a major large-scale deleveraging, or we see that other countries start to dump their treasuries and the US dollar starts to become very questionable around the world reserve currency status of the dollar. Another theory I came up with 3 or 4 years ago now is that when other nations lose confidence in the dollar and in the treasuries, more importantly, they're going to sell or they're going to dump, and all these dollars are just going to flood back into the United States and cause hyperinflation on a level that you can't even imagine. And the mistake that the United States have made is they've sort of outsourced, exported all their manufacturing, all their industry, all the things that are important to a country, they've exported to other nations, developing nations, as part of globalization. And this is a big mistake, a really, really big mistake, because it's only a matter of time until we see a breakdown. And we're already seeing a breakdown right now with the East and with Europe. We're seeing this breakdown. This is going to spread. I won't say any more on that today. And let's go on to Stephen's question then. In the event of an expanded European war, is it reasonable to expect increased capital flows out of Europe? The answer to that is yes. You've got to think, how do governments fund wars? It's always the same way. They sell war bonds. In fact, look at Ukraine, a perfect example actually. Look at Ukraine right now. They're selling war bonds. They're not called war bonds, but that's what they're selling. They're selling treasuries. That is what they're doing. People are flocking to buy them, which I'm very surprised by. I wouldn't touch them with a barge pole, personally. Again, this is where you start getting all the, the negative comments. Oh, you should support. Look, I support the people of Ukraine, but it doesn't mean I'm going to buy these treasury notes. There's a difference between emotional investing and very sensible investing here. I'm trying not to get into anything to do with that region right now, actually. So yeah, it weakens the currency. If you start printing money, you start printing currency, it weakens the currency, and then you start to see outflows. So yes, you could see some outflows from Europe. Easy question there. Thanks for that one, Stephen. Let's go on to Linda then. Neil, what are your thoughts on IRA accounts? So this is individual retirement accounts at this time. Seems like most people have funds tied up here. I've made my comments, thoughts very clear on this actually. I even did a really good video piece I recommend you watch, and it's called The Pension Crisis, or some sort of title like that. And I talked about how once the boomers start retiring, you're going to see a massive pension crisis, because instead of it being like this, where people coming in and paying upwards and then the people at the top, it's inverted. So you haven't got enough people working to support all the boomers at the top. So it's just a matter of time until these pension plans run out of money, combined with their very risky investments. They're getting riskier and riskier every year. And I haven't told any of you about this yet, but I just found out, and I haven't verified this information, so I need to verify it. But the Kentucky Teachers Union had 95% of their capital, so their pension plan, in a Russian bank that has just gone to, I don't know where it's gone to, but near zero from what I'm hearing. But I need to check this out. This is very bad. And I've talked about this before, how these pension plans are putting all their eggs in one basket to get a strong return. Terrible, terrible idea. And the fund managers don't care. It's not their money. You see, they make their commissions in a certain, they make their commissions by making as much profit as possible. So if they lose it, yeah, it looks bad on them, but there's no liability to them. So watch that video for definite there, for those of you that are worried about pensions and want to know. Okay, let's go on to Paul. Is paying your monthly mortgage notes in advance a smart way to get money out of the banks and help avoid bail-ins? So yes, but let me just talk about a couple of points here. You have to think about the savings rate versus the investment rate versus the inflation rate versus the mortgage rate, and then we could go on and on and on, but let's keep it to those 4 points. So let's say your savings rate is 1%. Your, what do we say, investment, let's say you can get 10% on your investment right now. Inflation, let's say it's 5%. We'll just take an average here. And then your mortgage might be 3%. So let's just use that as an example. Well, straight away your savings are the loser, because your savings are 1%, inflation's 5%, so it's eating away at your savings. So you've got a net loss of 4%. Okay, so you've got to think of it like that. If you take those savings and invest it at 10%, well, now you're gaining 9%, but you're still losing 5% from that. So now you're a 5% plus because of inflation. Now you think about a mortgage, and it's 2-3%, something like that mortgage rate. Well, if you can get 10% on an investment and your mortgage rate's 2 or 3%, it makes sense to put money into an investment. So you've really just got to look at these 4 areas to to really make a decision on it. Okay, the next 2 questions, I've had to sort of show who they are because the question is like this this long. So let me take this off as well. Okay, I'm just going to read out a little bit of Kelly's question here then. So basically, Kelly's living in Indonesia. Situation's very different to Western nations. People didn't get government assistance. They've changed their spending habits, growing their own food, trading between themselves. They had deflation at one point. Now they're starting to have inflation because of supply chain issues. So here's the question. I'm going to take it off the screen so it doesn't confuse people. So the question really is here. Do you think living in this more real economy will hold Indonesia and other similar countries in a better position for a quicker recovery than first world countries? So it's a really, really good question. So yeah, the biggest problems are not supply chains right now for developing nations. That's the problem of richer nations. Developing nations need to really, you've got to think of it like this, they've got to increase their infrastructure and their exports. That's the only way they're going to get strength. But either way, it doesn't matter which nation it is, they're all going to suffer at the end of the day when the dollar finally comes down and loses its reserve status. Whenever this is, into the future, they're all going to suffer the same way, all of them, because they're pegged to the dollar. But you've got to think, why would you peg your currency to another fiat currency made of paper? I get why in this, in the world we've been living in, but for me now, I would, if I was the central banker, I would be buying gold, and I'd peg my currency to gold. Now, I think this might be what happens in Russia. We haven't heard anything for certain yet, but there's whispers. You see, I've been thinking for a couple of weeks now that Russia is probably, and again, watch back over those videos and you'll see there's one I talked about gold. I think Russia dumped all those US treasuries and bought gold in 2018 because they want to peg the ruble to gold. That's what I think they're going to do. And I think a lot of other countries need to do the same. They need to peg their currency to gold and not the US dollar. And of course, that's a contrarian view, of course, but I think that is really what I would do if I were a central banker in a developing nation. But yeah, I do think that developing nations will do a lot better than Western nations later on, especially because they've got a lot of industry and exports, so that the people are working, and also the people have a different mindset. You know, you think of the people, you know, I've got a lot of Polish friends, Lithuanian, Slovakian, Czech. You know, I've got a lot of friends from that part of Europe, and it's a very different mindset. You know, when I'm hanging out with them, or when even a lot of them are mentoring clients, it's a very different mindset from other people that I mentor in the West. You know, that mindset is, especially from the older people, is when the, you know, broke away, became you know, the nations they are now. It was this weight lifted off them that they can just go out and just be whatever they want to be, and they work really, really, really hard. Now, I also see that in developing nations. I see it in the West in pockets, but I don't see it across the board, you know. And actually, what I see is an entitlement mentality. That is a lot of what I'm seeing right now in the West. Everyone feels they're entitled to everything, and that they're also not just entitlement, but it's having this opinion. Like, you'll notice with what I try and do is not have a strong opinion and say I am right and you are wrong. What I do is I look at everything and I say, this is what I think, and here's why. But if I'm ever talking to someone and they have a polar opposite view to me, I will just listen to them. Like, you know, I was speaking to someone yesterday who has a completely opposite view to me around everything going on right now with conflicts and COVID and all the other things. I'll listen to them because I want to know where they're getting that information. Now, unfortunately, everything was coming from the mainstream media. So, but still, even though I suspected that, I still want to listen to them. I still want to hear them out and see if there's anything I can learn from them. Now, a lot of times I can't. But this is what I'm seeing. It's this like entitlement mentality which has been propagated by media, and it's made people become lazy in their thinking, I think is one way to describe it as well, in terms of entitlement over money and possessions and things like that. Whereas I've never had that mindset, you see. I've always had the mindset of whatever I want in life, I have to go out and work really, really hard to earn that. And I've always believed that. So let's move on to the next question, and that is Tom. And again, this question was out of the screen. Excuse me. So what I've done is I've just taken the little snippet I think he's asking here. And then, so that is, until crypto becomes mainstream and a more accepted form of currency, are there any solutions to being forced to use banks in order to off-ramp or cash out from your investments? and that's a really difficult one, because I understand what Tom's talking about there. Because even if you use, say, a bullion vault, when you sell that bullion, it sells into fiat currency and into an account. Now, what if they try and confiscate that currency as soon as you do it? Like, there's bail-in, there's no liquidity. What if they say, oh, we need that currency? That's a very, very difficult situation. There isn't really a solution to the fiat aspect of it. But what you could do is transfer your bullion to another vault, especially if it's with the same company, a vault in your country, or a vault in another country, or however you want to play it. And that's what they'll often do, because especially with allocation, it's just numbers on a screen. So they'll move, one allocation of gold or silver here to over there. And then you could take physical delivery of it, personal delivery. That is one option. However, I think this is where confiscation of gold is going to come in the future. So this is why I said a few questions ago, there really aren't that many safe options right now. It's a very, very difficult situation. It's not good. I'm not going to beat around the bush about it. It's not good what we're going through. Next question is from Gerhard. So Gerhard, he wanted to say as well, his English is not very good, so I'm just going to explain what he's asking. Are there any, it's not his first language, I should say. Are there any opportunities in property investing right now that I'm anticipating over the next year or two? So that's what he's sort of asking. Well, the obvious one is if interest rates go up significantly. Well, here's the thing. Here's where there's risk. You see, if they don't raise interest rates, we're going to see a lot more inflation. And that could push up certain prices of houses. All houses won't be affected the same in areas and countries, but you could see that being pushed up, which is possible and a risk. But also, if they do have to raise interest rates, you're going to destroy affordability. Remember what I say. House price rises are always capped out by affordability. So that is what we're going to see. Affordability will be hit. Once that happens, house prices will have to plateau or fall in accordance with the new demand and affordability of people to buy. Now, that doesn't take into account hedge funds, BlackRock, and all the others who can just buy with cash that they've taken out. We won't even go there, actually. Okay, so that is a risk as well. So you could have prices coming down in the near future. See, that's why I'm not buying any investment properties right now. I would love to. I would love to buy some investment properties, renovate them, add value, rent them to some really nice families, young families, offer some really good accommodation. I'd love to do that right now. But the problem is there's too much risk. The risk is that we could see a housing decline. What if we go into stagflation where there's high unemployment? Are people going to be able to pay the rent? You see, these are the risks right now. We can't discount this. So the opportunities are sitting in cash potentially, having some cash. But again, then you've got a bail-in risk. You can't win either way. But having some sort of cash or precious metals that you can liquidate, i.e. allocation metals, having something like that. So when you see buying opportunities in real estate, housing, whatever, you then take advantage of those opportunities. So that is what I can see there. Simon, do you recommend buying the ruble? Right now it's in a massive slump. What would be the way to buy? Yeah, talking about pegging to gold again, I would personally, see if they peg it to gold, you're going to see its value go up. I think that's probably what they're going to do because they've got the reserves. Why would they not peg? That's what I'm thinking right now. If it were me, I would peg. Or I would do something with China, the yuan. I'm not sure exactly what I would do, but there's definitely something around that. Either peg it to gold or I would do something with the yuan, with the treasuries of both banks. That's what I'd look to do. And they've got to move fairly quickly on this before the ruble. You see, I don't know if it can fall much further or not. I'm on the fence with it. But would I be buying it? Probably not. I wouldn't. I think there's too much risk and volatility there. There's a lot of good investments that you can buy right now. Again, I talk about that. Simon, you probably just watched the video, the monthly video. I think you'd be a lot safer doing some of those investments I talked about. Okay, Mike is the next one. Is there enough Russian money in the London, UK property market to have an effect if when they all start pulling it out and panic selling cheap? Yeah, you know what, Mike? I've seen some of these articles this week on this. I think it's just bored journalists with nothing else to do, to be honest. Now, I always think through it logically, like in my head. You know how some engineers, they can build something in their head, right? I wish I could do what they do. They're very gifted. They can build an entire engine in their head with every last piece and put it all together. And then they build it in reality. Well, what I often do is I can see 10, 11, 12 steps ahead with finance and what might happen here and how that might affect things, things like that. So what I think in terms of them doing that, why would they sell right now? Because if they sell, what's going to happen to that money? It's going to get probably frozen in a bank account. They're not going to be able to transfer it back to Russia, are they? So I just don't know where these sort of articles are coming from. And also, you can't just, even if they panic sell, in England, London, it's not the same as in other countries where you can do some turnaround really quickly on a property sale. It takes a lot longer in the UK to do them. Even if you're doing it cash, it takes a lot longer than America and other places where it's just like, okay, done, sign this, done. It's not like that in England. So I don't necessarily think that is the case. Let me see if there's anything else I want to add. No, I think that probably covers it, Mike. Actually, I don't see what these news articles and reports are saying there. Okay, Wayne. Hi Neil, I've always wondered whether it's better to sacrifice salary and pay towards a pension fund, thereby availing of tax savings, or to not bother about a pension fund, take the tax hit and invest the net salary. What are your thoughts on this? Okay, well, firstly, coming back to, I think it was Linda who asked the question. Yeah, Linda asked the question, and that was on pension. For me, pensions are a big no right now. Again, I can't tell you what to do, but there's no way, I mean, I have no pension. I think I've got an army pension from the British Army that they'll give me when I'm, I don't know, probably too old to do anything with it. But I don't have any pensions. You know, there's just no way I would have one. When you've done the research that I've done, there's too much risk locked up in pensions. There really is. But at the same time, does that mean I would liquidate it and, you know, go off and do something else with it right now? I don't know, because then you've got the risk of having a lot of cash in the bank, and with everything going on with inflation and stuff. See, this is what we keep coming back to. You can't win either way. Now, there are some strategies you can do and investments that you can do, but in general, a lot of this stuff around cash and liquidity is a big problem. So what you could do, for example, one thing I say to people, if you really are worried about your pension, you want it out, buy an investment property. You know, do something like that. Make your own pension. Buy an investment property. If you can just get $1,500, let's say, a month in rent from a nice property, and again, you're doing a good service. You're renting to a nice family or young professionals or couple or something like that. Really nice house. They'll look after it. You're getting an income. They're happy because they're probably saving up for a payment on a mortgage. You know, you're offering a good service. That's probably what I would look towards, instead of having a pension which I can't really control and I don't know what's going to happen with it. But yes, let me answer the other part of the question. If you want to risk it, yes, there are tax advantages of it if it lasts that long. I mean, if you're talking 20 years to retire, I just can't see that pension being there in 20 years. Personally, if it's there in 20 years, I would be amazed. I'd be shocked. I mean, look what's happened in 2 years. Can you see how fast this has accelerated in just 2 years? Now 10x that to 20 years? No, I don't think so. Forget it. But up to you, all of you, what you do. Bernardo, hi Neil, what should you actually do if there's a gold confiscation? I own physical gold stored at home. Should I just not give it to them? How does it actually work as a gold confiscation? Do they knock on your door? Well, if you think about what happened in the 1930s in the USA, where they had a gold confiscation, an executive order goes out and they said everyone has to give in their gold. But if you actually, and I really enjoyed doing this study actually, looking at how much of an inflow of gold that there was into the treasury. And if you think of how much gold was out there at the time and what the inflow was, I think at the most, and I mean at the absolute maximum, only 25% of, and we're talking people inflow, I think only 25% gave their gold in. That's it. Now, you remember the Great Depression diary series I covered? That gave information, diary journal entries from that period. And even that gentleman, he said, you know, we got tricked again. We gave in our gold, and yet no one was prosecuted. Well, actually, I looked up, and I think there were one, maybe two cases. That was all I could find anywhere, looking through historical documents, of a prosecution from someone who didn't give in their gold. But they had a lot of gold. It's not like they had, like, you know, 10 ounces or 5 ounces. No, we're talking hundreds of ounces, if not kilos of gold that they didn't give in. So I think the look, if the government is taking gold, confiscating gold, they've got bigger fish to fry. They've got more to worry about than a few ounces of gold in, you know, yours or my or whoever's possession. I wouldn't even worry about it, to be honest. And anyway, you know, for the record, I lost my gold in a freak boating accident. Yeah, it was crazy. I was in my canoe, and you know, I was just going along, and I hit a whale, and all my gold that was in the canoe flipped out, and it went to the bottom of the ocean. So yeah, that's what happened to me. You know, so there we go. Let's go on to Milan then. Next question. Hi Neil, do you see an opportunity for China takeover of Taiwan, create own payment system and divide from West, as international capital flows are already disturbed? Will it support crypto market or weaken it? Yeah, I mean, I can see China taking over Taiwan for sure. It's just a matter of time, really. What tends to happen whenever you have things like what's happened with Russia and Ukraine at the moment, this is just the starting point, right? Remember, there's always, going back to the cyclical theories, there's always a trigger, COVID. Yeah, there's a trigger. You have moments of crisis where people let their guards down, countries let their guards down. Then you have something else occur. Then you have something else occur. You have like military conflict somewhere in there. One nation goes to another, one does this, one does that. There's some sort of infighting going on, or there's border conflicts. This is the sort of thing you see. And then it moves on to other things. Now, the whole time this is going on, what we could call distractions, there's always something bigger, an umbrella, shall we say, in the background going on, taking advantage of the crisis. There's always, every time you look back over these cycles, there's always some sort of group above the, you know, higher level that say this is an opportunity to actually create a change. Now, obviously, they think it's a positive change. We think it's not a positive change. We think it's a very nefarious, bad, evil change. So I guess it's all, perspective and how you see it. What else do I want to add on that? So you're asking about Taiwan. Okay, support crypto. You see, Milan, I can't really see a connection with the crypto market and what you're asking with a China-Taiwan takeover. Maybe some Taiwan residents buy into crypto. Maybe, but I'd say you're probably going to see a neutral effect. I mean, look what happened with Ukraine and Russians. A lot of them were buying into crypto. It doesn't mean that the crypto market held up. You know, we've already seen a correction, a bounce downwards again. So I don't know. I mean, long term, I don't think it would probably have much of an impact. But no, I mean, I'd have to think on that more and just look at all the different moving parts. But I can't really see much of an impact from that. Okay, Mika. Neil, what's your rationale behind wanting to move to the United States, especially tax-wise? Or do you plan to move to Puerto Rico or somewhere with tax incentives? Mika, I think you've missed like 3 months, my friend, of videos. So I've actually moved to the Isle of Man, which is, a lot of people say it's in the UK. It's in the UK region, but it's not part of the UK. It's its own dependency. It's known as a crown dependency. And so I don't really have any intention of moving to the United States at the moment. especially with everything going on still. There's still too much craziness, and I think there's a lot more craziness to come. So my focus right now, as my private community know, because I talk about this and how I'm investing, is to invest wisely, but at the same time get a lot of tax breaks from living on this island. There's some really good tax breaks here. So I save at least 25% tax from being here as opposed to what I would in the UK. And I save at least 20% from being in the USA as well. So it's a lot better. And then my intention is buy myself a nice homestead or a farm that's overlooking the ocean, 3 or 4 acres, something like that in the back, a couple acres front and side. That's my plan. Just to buckle down, work hard, and do that. Buy something like that. I mean, I won't tell you how much that will cost. It's a lot of money, a lot of change. But that's my plan right now, actually, Mika. Okay, let's go on to the final question then, and that's from Reagan. Let's see. Yep. Hi Neil, what is your opinion on the short-term and long-term outlook of commodity ETFs? So these are specifically wheat, corn, coal, uranium. Okay. So yeah, let's come back to the previous question that was asked. I think it was Megan, the first question here. Yeah, commodities. So it's mixed. Some will perform very, very well. Some will perform absolutely atrociously. What I would recommend, Reagan, what you always want to do is you want to look at your commodity in particular and then correlate it to previous recessions. See how it performed. Now, are we similar to a 1970s stagflation? Are we similar to the tech bubble right now? Are we similar to the 2008 crash, 1929 to 38? Start looking at this and correlating your commodity. You'll get a better idea. But yeah, definitely watch the video. I keep referencing the video. Just definitely watch that, and it will explain a lot about commodities. But specifically wheat. So I mentioned wheat that did a 4x return in the 70s. Corn did a 3x. Coal, I don't know off the top of my head what coal did, but I could look that up. So off the top of I mean, you've got to imagine how many commodities there are. I don't track every last one. I know a lot of the data, but not all of them. But coal, you're seeing some interesting patterns with coal at the moment, especially between Australia and China. If you've seen what's going on there, I think we're going to see some more coal usage, even though they say no, we're not going to be using any coal or anything like that. I think you might see some coal usage once they realize that these ambitious plans for green energy are just not going to be able to be hit. Not on the time scale they're thinking, which leads to uranium, the other one. They're going to need a lot more uranium. And you know, if you watch my video, what I think about uranium. So invest based on some of the things we've been talking about. Good. Well, that is it. It was an absolute pleasure, ladies and gents. I hope that really helped today, going over all of that. You got some good value. You got some new knowledge on there. It's great. It's a bit like a mastermind, you know, when everyone's asking these questions. Probably a lot of you at home watching, you had some of those questions as well. So if you ever want to ask them, I think I showed you how to do it. You simply go on to the Patreon. The link is below. If you go onto that anyway, you can watch the video that I talked about this month, and you can also ask a question next month, or you can ask me a question over private message. So that's the other way. If you've got something you want to ask, you don't want me to put it on screen, you can ask me over private message as well. So that's it. Thank you so much for being online, for watching, for supporting the channel. Take care. God bless you and your families. I hope you are all well. And I will see you this week with some more videos. All right. Take care.